income seeker. This channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened in the stock markets today during the day and how we can plan for a better trade for the next day. So we had the bulls trapped in the in the Nifty. You can see that the bulls got trapped in the morning, and then there was a big down move after that, right? So the index was basically dealing with the major resistance in the market. Let's get into the details and see what exactly happened. So the pre-market analysis for the March 24th, Thursday, tomorrow and expiry day would be based on candlestick patterns, price action, rolling all of these parameters that you see on the left side, and we'll have additional data analysis on these parameters that you see on the right side, and we'll have wrap-ups with some actionables also. So without wasting time, let's see the chart. So it's a wide range bullish candle, a bearish candle, sorry, and it's a bull trap because it moved up above the previous candle high and then closed below the high. So same thing happened in BANKNIFTY. So it trapped all the bulls who were long, and then it closed below it. So right. So that's pretty much clear. So this indicates what? Basically, it indicates that there is a huge resistance in the zone where it was trying to move up today. Let's get into the details. So overall, if you see, it's 70 points loss only that happened today in the Nifty, but bearish candle is wide enough because it gapped down from up. It moved down after a gap up. It is a bull trap, and still it is above 200 DMA, which is very crucial. And it is it actually went down further and bounced up back from the 50 DMA. If you look at that, you can see that there is a 50 DMA here, and that move up. That means it is taken. It's not basically bounced up. It is kind of taking a resistance at the 50 DMA, I can say. Right? But it closed below the previous day high. So basically, there is a price action that is trying to break out from the trend channel, and also a double top on the bearish double top in the higher time frames. BANKNIFTY also didn't lose much. It's 0.55%, like 0.5% of loss. That's 200 points lost, and compared to the previous day. And also, we have seen that it is a bearish candle that was formed, and it is a bull trap also, and it is resisting below the gap support. So BANKNIFTY has got a major gap resistance here, and it is also has got a 200 DMA. In the case of Nifty, it has already cleared the gap on the 200 DMA. BANKNIFTY is at a major resistance. So this 200 DMA and gap has to be cleared for the BANKNIFTY. That's a major hurdle. And overall, the price action is a trendline breakout attempt that is happening. Double top bearishness is all there in the medium term. And intraday, this is the price action that happened. It gapped up and then trending down before it settled at this 17,200 and 200 kind of zone, which was retested 3 times today. Same retest of the 36,000 levels 2 times happened today. Basically, it gapped up BANKNIFTY also, and then trended down before it found a support at 36,000 and here on the 17,200. So these two could be good support because it was not ready to give up this much further down from the 17,200 and the 36,000. So that's a intraday price action. And Bollinger Bands, if you see, it remains the same. It would be highly volatile because look at the distance between the BANKNIFTY's higher and the lower bands, and that's obviously explains the volatility that you see. And the price is above the median, so indicates that the bias is towards the upside. Slight expansion happened today actually on the Nifty, but it did not sustain when the bull trap happened. And overall, you can see that it is a sideways momentum with volatility on both the indices. Right? Because contraction of the Bollinger Bands can be seen overall. Support resistance level, making note of that 17,315, 7,400 is major resistance where it came down today, and 7,500 and 7,600 Fibonacci 23 is the next level, and above that, yeah, 7,800, 7,850. Downside, the support is 7,200 to 7,300, where it is bounced up 50 DMA, and then below that you have the gap support, which is still not broken on Nifty. 70,000 is the level for that. Below that we have 16,800, 16,900, which is the Fibonacci 38 retracement levels. That's the support on Nifty. BANKNIFTY, if you see it, you can clearly see that it has hit the gap area and then fallen back. So that's resistance immediate at 36,300 to 36,800, Fibonacci 3811. Above that you have the place where it got hit and fall back, that is 37,000 level, and then that is 36,900 to 37,000 levels, and then you have the gap that is also part of the gap. This resistance, two resistances are in the gap. So 37,500 Fibonacci 23 is the level where you have to watch out for. Similarly, in Nifty, 17,500 is the level that you have to watch out for. Close above that green would indicate that the price movement may be upside on the long, right? 38,000 is the resistance above on top of that. So Bank Nifty, that's the reference that you have to consider. Downside, you have the gap which got breached actually, but it closed above inside the gap only yesterday. So that way, this can act like a support still, and that would be 35,600, 35,900 that zone. And then if that is breached, then you have 35,000 level, that's Fibonacci 50 level also. If that is breached, then you go to the 350 to 34,750 that zone. And again, if that also is breached, then you have a support zone near 34,000 levels, a very good support zone. So let's see support resistance on the Bank Nifty. Nifty I already seen earlier. So momentum and diversity, momentum is also, you can see that Nifty has got momentum that is sideways, and it is actually resisting below the RSI 60. That means there is a selling pressure. And Bank Nifty also sideways. In the medium term, also it is sideways. And in the medium term, you can see that it has gone down and taken the RSI support, which is not shown here in this diagram. So medium term is weekly charts basically. So it has taken the RSI support and bouncing, which is bullish. So as of now, overall, it is sideways momentum for the both indices. No divergence is seen as of now. Trend indicators ADX is showing that it is DMI positive continues in the both indices, Nifty and the Bank Nifty. The crossover had happened in Bank Nifty yesterday, so it remains that it is intact, but it is not having enough strength because of the strength indicator in the green line that you see is weak, showing weakness, rising, falling down. But Bank Nifty on the medium term is bearish, and the strength of that is increasing. So trend is not that great, recovered yet, but trend is good enough on the short term. It is not recovered yet in the medium term. India VIX is another small spike up, happening 2.8% and 24.7. 26.2 is the implied volatility, and the IV percentile is also higher, 95.5, and 24 plus 24.7 is very close to 25. Is like it's kind of high volatility. That means the fear is still there in the market, so you gotta be cautious. Our data is showing that there is some resistance that has got added up. A lot of resistance has got added up. Some unwinding on the far away OTM put side also has happened, but resistance building is what happened today prior to expiry tomorrow. So it is tomorrow expiry that way. So look at the fear in the market. Put writers are thinking that 16,500 would be the best support, and then 18,000 would be the best resistance where the call trading has happened. So highest contracts are there, and 17,000 and 17,500 also has got second level of support and resistances. 0.55 is very close to bearishness put call ratio, and Bank Nifty also 35,000 to 37,000 is 2,000 point range that the highest puts and calls are there. 36,000 and 36,500 is also having enough of second level of support and resistances. 0.52 is the put call ratio in the Bank Nifty that is close to the bearishness, not bullish at all, and which is open data is showing that short bid happened in Bank Nifty today, and long unwinding which is also bearish that happened in the Bank Nifty today. So open analysis is kind of slightly bearish, not slightly, it is bearish, and a very wide range put in Nifty. The expectation is that there will be huge volatility, which could be 1,500 points apart, right? And this is what happened. Very few stocks moved up today, but because the two stocks moved up, we had the market that is did not go too much down, right? It's a mixed bag of index 50 that you see. Reliance did well, TCS did well, Tata Steel and metal stocks did well, and ITC did well. So ITC is the star player today. So ITC, Reliance, TCS and the metal stocks maintain the market, not from crashing too much and losing only 0.5% on both. So financial services and the pharma, metals, energy, everything did well. What did not do well is FMCG, other than ITC must be. Automobile did not do well. Cement, chemicals, construction, capital, services, fertilizers all did bad, right? So it's a mixed bag day. Index heavyweights is a red day on the HDFC Bank heavyweight. Index heavyweights analysis is what we're doing. So it's resisting it below the RSI. Sideways momentum continues. it is having a mid resistance upside. HDFC is also closed red. It is also resisting below the RSI 60, and it is at a current major resistance zone from which it is ferociously trying to come out of that. Reliance is the star. It is doing a clear breakout from the from the cup and handle pattern, and it's bullish, high volume, good volumes, above average volumes, and good momentum of bullish zones, and trend is also good. Infi did close red today. It is near an all-time high. Momentum is bullish, but it's very close to an all-time high, so I have to be cautious. TCS closed green today. It is currently in the channel and a bounce from the channel bottom, and long way to go, right? But momentum as of now is still sideways. ICICI Bank at a major resistance zone, closed kind of red today. Momentum continues to be sideways. Kotak Bank closed red, bearish. Hit a major, a minor resistance, and then seems to be falling back to the major support zone below. Momentum continues to be sideways. So the only stock that was in action today was Reliance. Sectoral performance: VCIT closed flat, metal closed green, auto closed down, pharma closed up green, FMCG closed down, reality closed down. So FMCG, reality, and auto down. IT and farm and IT is kind of up, metal also kind of up, but metal is the star. Metal is 1.2% up on the metal, only sector that is bullish, and medium to also bullish. So the only sector that is bullish currently is metal. IT very close to an all-time high, right? Auto is rest is all sideways momentum, not bearish but sideways momentum. Pharma is catching up to the bullish zones along with the metal, but weekly, today also it is flat but closed up, but it formed a gravestone doji, so you have to be careful if you are taking long, ignoring the medium term. So metal. So that's a sector support. Interesting participation, interesting today. Small buying by Fyers 481 crores and small selling by LDI. So it's kind of a strange kind of day because none of the institutions are showing much interest. One of them is even selling. The DIs were supporting the market so far now started selling slightly. That's the reason why the market, in spite of FI buying, also could not. So retail money is, for some reason, hesitate to participate in the further move because of the uncertainty in the market that you can understand from the data. Dollar index is kind of US dollar is USD INR currency pair. If you look at it, is shooting up again, right? And close 76.4 is again gaining momentum and going up, which is not good. Yeah, dollar is also also spiking up, and dollar index is shooting up. After some consolidation, it seems to be heading towards the 99.6 kind of next distance. Momentum is also catching up above. So that means that we may remain at these all-time high levels of the rupee, weekend rupee. Uptrendizers, if you see, it was a green day, and now we can see it's green. Momentum is, but not at into the bullish zones. It is kind of resisting at the bullish zones. Small red is seen in the Nasdaq, and small red also seen the latest data in the S&P 500. Also, basically, it has reclaimed the support zones that it had slipped down from and has been bouncing since last several days. And it's in a safe zone, you can say, but the bullishness is not seen, and the momentum is poor in all the indices. But otherwise, it's at least it's not falling down. It's not bearish. Crude is shooting up again. Another worry along with the dollar strengthening is that the crude is 112 and it's rising. It had cooled off nearly 27% previous 2 weeks, but for some reason it's again heading high towards 120 13-year high level. So momentum also is in the bullish zone. So trend has crossed over to bullish, so there's every chance that it can again go to the all-time high levels. Gold is kind of consolidating a green close today. It's in the sideways momentum. So it looks, it is settling down at the major support zone after an attempt to break out, which failed. Failed very close to the all-time high. Right, so that's what gold is. So basically consolidation. Two actionables. ITC may continues to be another peak. It is very good price action can be seen. Bullish momentum, above average volume. ADX trend indicator bullish, but remember that there is a 310 has got a resistance. 267 also would have a resistance, so that those points you'll have to book the profit unless you have it as a long term. But yeah, position and swing it can give some amount of profit. But IDC is famous underperformer, but it's the channel price action is very beautiful, right? So yeah, Jindal Steel and Power is another long. There are weekly channels, weekly candles, but the entry has been made on a lower time frames on 1 hour or 5 minutes or 10 minutes or daily candles, sub daily candles. This is where the entry has to be made. Jindal Steel and Power is also having a flag breakout after a rounding pattern breakout. Reach certain level it pulled back, so it's a nice price action. Bullish momentum above average volume and crossover bullish zones territory of the trend also. Trend, momentum, volume, price pattern all in favor. Wrap up is a neutral mild bearishness is all my view for tomorrow. It's based on the chart pattern, support resistance levels, momentum, trend, indicators, Bollinger Bands, all that we are studying. So summarized, a 10% recovery happened in 11 days of market movement, more than 10% basically, probably 11% or so. You consider today's up more also. So the major problem is that it's a major resistance zone, especially Bank Nifty is having a gap and 200 DMA to clear. Before clearing that we cannot say anything. And FI participation is like aloof and they're not very keen to buy much, very small selling and then 3 times 4 times selling the next day. Very small buying for the FIs now last 2 days, but when they sell huge. So DI is also for some reason has taken a pause and not actively participating, which is a worry. So rising crude prices and dollar strengthening and rupee weakness, which will indirectly somewhere or other impact market performance. So the last section is a repetition mostly. So it's like tomorrow is going to be volatile highly because it's a expiry day, weekly expiry day. So expect that. In addition to all the other uncertainties about the market would have additional volatility because of the expiry. Even today there was a lot of volatility in the market, you can see that. 17,500 and 37,500 are the two levels to watch out for the Nifty and Nifty. So any close above the 200 EMA is what we have to look out. Until then, it will be like this. Market will be choppy because of the huge distance between the bands of the Bollinger Band. So 1LP stocks are happening close, so uncertainty is there, volatility naturally will be there about 20 and you have to be cautious. Either stay away or play safe. Reduce your position size and give wider range when you're playing with derivatives and options. So institution selling continues, right? But although today you can see that it is a small pause that has happened, that's not indicative of a revived buying that is there for the institutional participation. It's not seen. It's just a pause, wait and watch kind of thing. So positive factors is that we had a strong recovery after a very good correction of 10 to 15% in the market, and now it's a time to wait and see how long the global cues are remaining. And once that moment is there, the market can trend upside. Until then, it will be consolidating or slightly retracing some more, and then between the range of 15,000, 17,000, or 18,000. Right, 15,000 and 70,000 basically. The 2,000 points is what we have been hovering around since long. So quality stocks can still be picked at this because market is still 1,500 points far away from the all-time highs. And SIP mode that purchase can be done. Always hedge your portfolio with risk-defined strategies like vertical bets, current risk spreads, non-direction strategies, whatever. If you're taking all overnight positions. Indeed, I also use type stop losses because volatility is huge and reversal can happen anytime. Right. So reduce the position size and choose a wider range when you're playing with, except on expiry day when you're playing with options strategies. So that's a view. Neutral to mild bearishness. Right. In the top of the band, unless it explodes up and breaks out, it may naturally fall down to the median and then consolidate in that zone. Right? There is volatility contraction that's happening, so market may remain in this zone, in the sideways for more time. So that's a view. So if my view is based on all of these parameters that we already studied, so your view could be different. You could go for a moderate bearishness or a mild bullishness, all this is possible. That's up to you, right? So if that helps you to frame your view on the market and your trade plan for the next day, then consider hitting the like button and then share it to your friends and colleagues, so that it helps us a lot, because we have very few subscriptions, and we need more subscriptions to be motivated enough to do this every day. So thanks for watching. Happy trading and happy learning. Bye.